Let's have the uncomfortable conversation about losing trades and stopping out of trades that may have looked great or have been winners in the past but are now starting to fail. And how ironic is it, guys, by the way, that yesterday I made a video talking about how literally everything looked great, particularly megas, larges, and mid caps, continuously hitting 52-week highs, 50-day highs, 20-day highs, etc., to try to explain that maybe every single market pullback isn't the end of the world, and then we get hit the very next day with a 2 to 3x ADR move, and it does all of a sudden feel like the end of the world. I have egg on my face. I can admit it, but let's talk through it, because as traders, we have to constantly be managing risk first, looking for reward second. My name is Hamilton. I'm here at the Trading Initiative. Let's talk for the next 10 minutes what we expect or what we can reasonably plan for, maybe not expect, but plan for in these index pullbacks if they occur. And then also I want to go through a couple trades that we stopped out of today, and you can laugh at me at the end of it because we took some losses. Imagine that. We don't just win every single trade. First things first, let's talk about this potential pullback in SPY. Today was a particularly brutal day. If we shift click, top of the candle, bottom of the candle, that's a 2% move. So for those of you bears that have been sitting there waiting for a 2% move, this potentially is the beginning of your descent down. I have no idea if it's going to actually occur. Don't know. Don't particularly care. I don't try to prophesize what's going to happen in the market. I strictly trade the trend. But if you are waiting for a 2% down day to kickstart a further downwards move, today might be the day. So if you've been planning to short the market, this looks like a potentially good start. I will give you that. If you've been praying for a pullback, praying on the downfall of all of the bulls and all of your enemies, this might be the best day ever for you, at least in the last 4 months. What happens in a doomsday type of scenario, correction in the market? First things first, I want to point out, we talked about this yesterday in the newsletter. Corrections tend to happen once or twice per year. Corrections, by definition, are 10% pullbacks in indexes. We got 2 last year. Obviously, the most difficult one was the late July through late October corrective phase in the major indexes, SPY, the Qs, etc. It was particularly challenging because it was not necessarily just a big drawdown that people made a bunch of money shorting. It was this long, drawn-out, grinding type of price action to the downside that was really hard for both sides of the trade to make any money, bulls or bears. A lot of people were strictly selling premium into this because that was realistically the only easy trade, if you can say that there ever is an easy trade. But after the late October low, when we started to see divergences, if you were able to flip out of this corrective phase and start getting long, it led to the best 4-month rally in the last few years. This has been an incredible run, Q4 of 2023 and Q1 of 2024, if you were a bull. Having said that, all good things come to an end. And if this is the beginning of a steeper correction in the market, if this does mark a potential pullback, what we're looking for is a potential all-time high breakdown by a couple of dollars. A 10% move more or less would put us somewhere near 470. In a scenario like that, I'm already telling you, I can see it. I've been visualizing this for weeks because I actually expected this to happen in February and it didn't. The headlines are going to read that the market is going to fall apart. Bears are winning. Doomsday is coming. And I guarantee you, just like every other time in bull markets, just like it did back here, it's probably not going to be the end of the market. I'll tell you right now, if you're following the content inside of TTI, we do not just aimlessly buy the dip. We're not dumbasses, at least not fully. If you want to call me an idiot because of yesterday's video, feel free. But what we do is we look for divergences across intermarket analyses that we really like to use, the consumer discretionary versus staples, high yield debt, all of this type of stuff. But we also look for momentum divergences. If you're watching this type of content over the next few weeks and we do get this steeper correction, you're going to see kind of the process that we use to start buying. And we expect if we do break below 478, it's going to bring a huge influx of shorts. They're going to think that this was a bull trap and that we are headed back down towards new lows. It's probably not going to work for them, but we're going to allow them to do that. Inside of TTI, we're going to sit there and we're going to wait, and we're going to start systematically buying down here, assuming that we do have some of that extracurricular stuff telling us that momentum divergences and things are starting to play out. That is a rough game plan. No idea if that actually plays out. I don't even know if we get the corrective phase that people are expecting right now. But what I will say, point for the bears, if this does end up being the move, congratulations. Hopefully you take advantage of it. Seriously, take advantage of it. Today's move shook the hell out of fair weather bulls, 100%. And the Qs, I think, are even better at explaining this. The reason why is we really haven't done anything for the last 2 months. Realistically, we traded here 52 days ago, same price. For 52 days, we haven't really done anything. And I think a majority of the bearishness has come through the fact that most people are just bored. The easy trade that we made a bunch of money in Q4 of 2023 and into Q1 of 2024 was tech, but particularly semiconductors. They haven't really done a whole lot in the last 52 days. And so people are thinking, well, if they're not going up, they got to be getting ready to come back down. Maybe it's true. I don't try to front run that type of stuff. Maybe it's true. But what I will say is that if the Qs break down here, it's going to feel like the end of the world. It will feel like the end of the world. Once again, a 10% correction is going to put us somewhere near $400. We're going to have the same game plan in the Qs as we do the S&P 500. We're going to wait down there for some different momentum divergences, et cetera, to tell us that we should start going along again. It's the exact same process we used back here, and hopefully it yields the same results. Hopefully. But I have no idea. Maybe tomorrow we gap back up. I don't try to front run the market. I don't think that I am smarter than the market. My ego has zero place in my trading system, which is why let's talk about some of the losses I took. First things first, I took a full max loss on ABBV. So for those of you that hate me, congratulations, you can celebrate. ABBV, for whatever reason, this was an area of the market that was breaking out into all-time highs. You can see healthcare breaking out into all-time highs here, but for whatever reason, after about a week or two, we just started sideways consolidating, and then we broke back down over the last 3 or 4 sessions. I don't know why. It's not my job to figure out why healthcare isn't performing the way that the rest of the sectors are at all-time highs, but it just isn't. It's my job to manage my trades. ABBV, I bought the all-time high breakout because this was and continues to be a sector leader up until today. Now, a negative headline came out today that was already kind of bringing ABBV down intraday. As a matter of fact, we gapped up today and we were actually up kind of a lot. On the major indexes, most things were up. And then a Fed speaker came out, kind of ruined the party for everybody, at least the bulls. The bears have been celebrating, which is great. But it caused ABBV to sell off even more. Generally, we consider this a capitulation candle. If we shift click down, we can see this was a 5.6% move off of a 1.43 ADR. This was a huge move in ABBV. Now, this is one of those trades. You know that if you've been following our content, we close half at 100% to remove all risk. This never got up there. Max, I believe, was 40%. These are my chicken scribbles going through these types of trades with the guys inside of TTI, but 40% max. Never got anywhere near 100%. Then we started to sideways consolidate, and then today we got the big cut to the downside. We said inside of the Discord, we want to cut at 173, and we did. Cut at 173. This ended up being a 50% loss for me. Some other guys got out a little bit earlier. I tend to wait till closer to market end to execute my orders, and in this particular day, that worked against me. So I took the bigger loss in the group. Egg on my face, laugh at me all you want, but I will tell you one thing. I respect my stops 100% of the time. Sometimes that bites me in the butt, but I will tell you what, I will never, ever blow an account because I'm too stubborn to stop out. Another trade really quick that we probably will stop out of, I don't know. SHAK. This is a free trade. We were able to close half at 100% 2-3 weeks ago, but for whatever reason has just stalled out. A close below 100 tomorrow could potentially look at us cutting this position. Now, I do want to point out that if you close half at 100% and you claw anything back whatsoever on the remaining contracts, it is technically profit. It's not a huge win. But please know that if you close half at 100% and then you close the last portion of your trade down 30%, for example, you're still getting money back on the trade, which is profit. It's not a lot, depending on how many contracts you got. But don't take this as a lost trade. You've covered your risk at the 100% mark. That's why we do it. It makes managing these types of trades way easier. So I'm not going to sit here and say this was a great trade if we end up stopping out, but it's not a terrible trade. You didn't lose any money. So good job on that. Last one is LYFT, sub $17. Didn't get there today, but potentially going to be a max loss as well. Max loss meaning we were unable to close half at 100%. Excuse me, not max losses in negative 100%. But LYFT never got up, never really got going over the last few sessions, trapped underneath the overhead supply. And here we are hovering about 40 cents above our stop loss. We will be looking to stop out of this as well, which I'm assuming is going to be another 50% loss just like ABBV. So that's back-to-back 50% losses that we're going to be closing. And for some people, that might be soul-crushing. But take 100 trades and see how bad it is when a bunch of your other trades are up a couple 100%, you're able to risk off at 100%, et cetera. It's really not that bad. Taking losses is part of the game. As a matter of fact, our average win rate over the last 4 years is 50%. So 1 out of every 2 trades we take inside of TTI actually ends up being a loser, right? So once you get that out of the way and you realize that I'm going to lose quite often, you can start focusing on managing risk and not trying to play hero ball and win every single trade. One other name that I forgot, this is the last one, IoT, another one, full loss, once again, down 60% on this one. For whatever reason, IoT never got going. You can see the thought process there. But I want to point something out. I'm sitting here kind of talking about the thought process behind, if this is a deeper correction, what are we going to do about it? Well, we're going to be buyers at certain levels. We might take some short-term shorts. It's just generally not our style. We don't want to short in bull markets. It's just generally, it's a harder trade. It's a harder trade. If that's your type of style, congratulations. I hope you take advantage of this if it ends up being that type of environment. For us, we're going to be looking for strength. We're going to be looking at watch lists of relative strength. We're looking at key areas to add. But now, let's say this corrective phase does start. We have an immense portfolio of positions that are up, and most of them are free, and they're up huge. We do not want to let those things go to zero. And I'm going to show you really quick. Let me show you what my sample portfolio is. Well, it's not sample. This is live money, but I'm going to use the same portfolio that I used during the small account challenge video, webinar, or whatever you can see. This is an open portfolio that I have. These are a majority of these trades. Actually, every single one of these trades on the book right now are trades that we have inside of TTI. You can see how big some of these wins are. 322%, 328%, 532%, 896%, 200%. So you can see when I tell you guys that I'm not necessarily worried that the market is pulling back. It's not that I don't have risk in the market. I absolutely do. It's that I've managed risk on the way up. I've taken profits out, right? It's very important. I've taken profits out on the way up. I've covered my risk at 100%. So when the market pulls back, it doesn't feel like I'm in a boxing ring with Mike Tyson beating the shit out of me because I have to make decisions. Obviously, we're not going to let all of these things just dwindle back down to zero. We're going to close these if the market tells us, hey, this run is over. Absolutely. But it's not the end of the world if you're taking profits, on the way up and you have these massive wins. Because I'll tell you right now, if you look at over the last 3 months, that's not a bad equity curve. That's not bad. And most of the guys in TTI probably look the same, and you do too, right? That's how this stuff works. So once again, I'm telling you, number one, if the market does actually start pulling back, it's going to open up a lot of opportunity to the long side, but it might take a while to get there. If you're bearish, take advantage of it. Aggressively attack the market. Hopefully it works out for you. I have no idea where we're going to be tomorrow, let alone next week or a month from now. But if it does end up starting to correct, you're going to see the videos that we put out on this channel reflect the kind of patience that we normally show inside of TTI. In bull markets, we are generally more buyers than sellers. In bear markets, we are generally more sellers than buyers. We don't try to reinvent the wheel here. We trade with the trend. Number two, we take losses. Yes, once again, max loss on ABBV, max loss on IoT. A couple trades here that just didn't work. I got bopped out. If you want to talk crap to me in my comments because you hate me, feel free if it makes you feel good. It doesn't personally hurt me taking losses. But hopefully this goes to show you that, yes, obviously on YouTube I can talk all of the time about all the wins we make, but we do make losses. And I'm being transparent. We lose about 50% of the time, actually. As long as your equity curve is up and to the right over a large sample size, you're doing the right thing, which hopefully that Robinhood chart that I showed you, which is the same account that was just in the small account challenge, which is linked in the upper right-hand corner. As long as it's up and to the right over a large sample size, you're going to be fine. And then the last thing, manage your risk on trades on the way up. It makes the entire process easier, right? If you're in a massive trade, we'll take CART, for example, close half at 100%, and then chip a couple off at predefined price targets, wherever those might be for you. That way, if the trade does become invalidated or the market pulls back, it's not a complete waste. You've taken profit on the way up on the easy side of the trade. So when the market starts to falter, it doesn't feel like you're getting the shit kicked out of you. Trust me, it makes trading a lot easier. Last thing I'm going to say is don't ever listen or take offense to anybody's opinion, whether they're bullish or bearish or think you're an idiot or whatever. It doesn't matter. The only thing that matters in this market is if you're making money. And if you're not making money, you're probably going to be a lot louder than everybody else. Guys, my name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, or if you don't, go ahead, leave a comment. Tell me how big of a dumbass I am. I would love to hear it. Catch you in the next video.